Today, I'm going to talk about R&D tax incentives. I've spoken about it previously, but it's more just to really update everyone. So give you a bit of an overview of the tax incentive, how it works, what's sort of new and what are the pitfalls and traps. I'm going to do a little bit differently today. I'll probably cover off a little bit of what's new and some fun facts at the beginning, if you can consider R&D fun. So a bit of fun facts. Now, the R&D tax incentive is administered by the ATO and AusIndustry. And AusIndustry sits under Industry and Research division, if you like, and every year they pull out a report. Now, this report gives you a lot of information on registrants, the size of registrants, the regions, the states, etc. And now the only problem is it's delayed. So, the most recent one they've produced was March 2023 for the 2020-21 applications, so 30th of June 2021. As you know, we've just recently done 30th of June 2022, and we're coming into the 2023 year. So from 1 July 2023, people can start putting in their R&D applications, and I'll go through all that a bit more detail. But the fun fact is that, in 2021, they had 12,403 registrants going through the R&D tax incentive portal, so through AusIndustry, if you like, not through the ATO. Some people can register with AusIndustry and they don't actually end up putting a claim through for whatever reasons they have. Interestingly, the expenditure that they've actually put in the application was about 13.4 billion. But as you can imagine, with the application, it doesn't have to be exact. It's a pretty good estimate. So that's not necessarily the number that's claimed in the tax returns. And out of those applicants, probably 85% are in the SME sector, and the rest is large. But when you look at the expenditure size, it's 50-50 probably from an SME and a large. So the large do claim quite a bit when they do claim. 85% of the registrants are refundable. If you don't know much about R&D, I'll go through that through the slides. And someone did ask about the agribusiness, and only about 5% were claimants in the 2021 for the agricultural business sector. Most claimants are in the services industry. The software development area would make up about 65% or so or more. Now, again, that's 2021. I don't have the information for 2022. Now, from 1 April 2022, some of you know the clinical trials, they went through a determination and said you can shortcut if you're registered and you have a number, if you like, a registration number so that you can do clinical trials. There's a determination saying if you meet these criteria, it'll make it easier for you. And in that time, there was about 121 applicants that went through and used the methodology. So another fun fact is that 30% of registrants, so the 12,403, lodged in the last week of April 2023. So that's the, that is, of course, sorry, that's 2022. But it's interesting to know that the last week of April is when that's the deadline date, when a large portion are putting their applications in. Also mentioned was that new registrants were majority made up of SMEs in that professional, scientific and technology services area, and there were companies less than 2 years old. So that's just information, and there's much more. If you want a copy of that paper, you can look up R&D tax incentive registrations 2021 or ask us and we can provide that for you. Another thing, I guess that's new is the Board of Tax review into the R&D tax incentive. And as you may be aware, that there's been a lot in the press over the last 5-6 years and a lot of reviews being done. And one of the reviews was the R&D tax incentive dual agency administration model. So it's administered by the tax office and AusIndustry. AusIndustry gives you the registration number, and then the ATO gives you the money. or the rebate, depending which way you're going. So there's specific rules on for Oz Industry, what you need to meet to be, what it is R&D, and then others for the ATO as to expenditure side, what you can claim. So what came out of that review was that really no change. There was discussions about should you have separate administration for software developers, etc. But there's no change. They just require a joint charter, more transparency between the agencies. It doesn't really affect you as a taxpayer, maybe more if they're sharing information, but really no change for the taxpayers' side from your end. Another thing I thought was interesting when I was sitting at a round table with Oz Industry, ATO, and other professionals in the field is the CSIRO have an innovation to grow. So they have a 10-week program for SMEs with employees of less than 200 and looking to expand in the sector. So what does that mean? That really is just a 10-week course on, okay, how do you develop your R&D plans, if you like, and you get mentors from the university or CSIRO, etc. So that was interesting. So if you want to know more about that, let me know and I can send you the link. We specifically don't do anything in that area, but I just thought I'd mention it. Now, just moving on to some of the other areas that were announced in the period, which I've mentioned just now, is the determination on clinical trials. So that means that, a body, not the Oz Industry itself, but let's just call it that, can make determinations for different industries. So in this case, they've done it for clinical trials. So pharmacy organisations which go through that process of testing their product. And they specify what is a clinical trial. From 1 April 2022, you could effectively use that. What does that mean, though? That means that you can shortcut the application. So in the application, instead of having to write all that core activity, which I'll go through, you can just say, if you meet all the criteria in the determination, we have a number, a certificate number, CTN they call it. So then you can use that in the core activity, and it cuts down the time to do the application, because if you do clinical trials, you do already have so much evidence and to support it. So that was a good outcome. But what does that mean for taxpayers outside of that pharmacy or pharmaceutical area is that Oz Industry is looking at other ways that they can do determinations for other industries, and that might make life easier in the future for other industries. So that's a wait and see how it can help your organisation. Extension of time. This is not to be used lightly, but there is an opportunity to extend the registration period. But again, you have to meet the criteria to get the extension. As we know, closes off usually, so 30th of June 2023, you have 10 months to lodge your application with Oz Industry to get a registration number. And that's to register effectively your application, your R&D. Now, that does not mean that they certify that you have R&D. That will only come where they ask questions or they do a review. So that's just a registration number that you'll use in your tax return. So there is possibilities to extend, but I wouldn't wait for that to happen. We try to get all our registrations in before the end of April 2024, so that we don't have to use that. But in mitigating circumstances, there is that possibility, which there wasn't previously. And that came as part of the changes from 1 July, which I'll touch on, 2021. Now, the other thing they introduced back in 1 July 2021 was a transparency on the R&D claimants. So that means that the ATO will publish R&D claimant information starting from 1 July 2024. What are they going to publish? What information they're going to publish? And they're going to publish the 2022 R&D information, the R&D entity name, the notional deduction, and the ABN. So people can look up the ABN, get the name of the entity, and they'll put the R&D notional deduction. So not the R&D offset or what your refund is or anything like that, just what you actually claimed as a deduction for the R&D spend. Now, moving on, just a refresher for those that may be not aware that from 1 July 2021, there was changes to the R&D Tax Incentive Program, which I'm going to run through quickly. And then on the 5th of July 2021, we had the access to the R&D portal. That means that you used to download a form and send it, and smart form, but now we have a portal. Now that portal has been going now for 2 years, so some that have already been claiming, they're all over it. There's some interesting facts about that portal, which I'll go through in one of the slides later on, but it's an easier way that we can all view the application at the same time and information. Now, with that R&D portal, I tend to send out the Word documents to the clients and they complete that, and then we discuss them, and then we transpose that into the R&D portal. There are many ways of doing it, but that method works because even though the portal, is all very nice, sometimes it's not easy to move things around. So that way, the first draft, we can work on it, decide if we want to have things in that portal or not, and then cut and paste through there. April 2022, that's when, extensions could be used. As I discussed, we had some more information on the software development area and, guidelines from AusIndustry, and the commencement of the clinical trials, which I've run through already. Now, we're just going through the AusIndustry side. So now put your minds to, this is the AusIndustry, we're doing the application. Now, when we do the application, there are a few things that we need to be concerned about. And that is, are we carrying on R&D in a company? Before we can put the application and it'll be a question that's in the application, what entity, is doing the R&D. So it's got to be a company. And if you're a consolidated group, it has to be the head company that puts the application in. And it'll ask all those questions in the application. You can't do it through a trust. You can't do it as an individual. It has to be carried on through a company. The next criteria, these are sort of the basic things you need to look at first before you even consider if you've got R&D, is do you own the IP? Or what you're developing, do you own it? Do you have control over it? Who's going to take the financial risk, the burden? Is that going to be you? So, or your organisation, the company itself. So if you get a refund on what you're doing, or somebody's going to pay you to do the research, that may not be R&D. Is your spend over 20,000? You can have spend of less than 20,000 if you use a research service provider. You collaborate with a university effectively, but normally it's over 20,000 spend. And also to make it worthwhile, you have to consider if all you've got is 25,000 spend over the whole life of it, is it worth putting a claim in? Have you got core and supporting activity? Now, this is the fundamentals of the R&D incentive. Have you got core activity, core R&D? And I'll run through that. And the other fundamental is track and document your activities. Can you evidence it? So should you have AusIndustry come and look? Can you show that you've got reports that you were doing the R&D? Can you maybe show that you've had some meetings and you've got minutes to the meetings to show what the project relates to? Have you got a project outline? It's not required, but I would certainly suggest it because it's something that you can fall on, and it's easy to explain or show to someone that's investigating or reviewing. Now, I just want to go through the core activity because this is the bit where I think it's always in question. Do we have core activity? And it's easy to say the words, but it's probably harder to identify it at times. Other times it's fairly straightforward. And that's why I like to, give clients the Word document, let them write it up first, go through what they're doing, understand, what is the information that they need to put in the application, and we assist them to guide them through that. We don't write the R&D applications like some other organisations. I just want to be clear on that. I'm not a software developer. I'm not a manufacturer. So it would be very difficult for me to write it, but certainly can guide on the criteria that the legislation has. So going back to core activity, first thing you need is experimental activity whose outcome cannot be known by a competent professional in the field and can't be determined in advance. So, for example, you go in a professional, and that could be someone in your organisation, by the way. It doesn't have to be an external. They go through and say, oh, yeah, actually, I'm not sure, can we do this or not? Look, there's some, technical journals on this. I may have written some journals on this, but I'm not really sure we can get to the outcome without going through second step, determining, doing a systematic progression of work based on principles of established science and going through and seeing if we can actually carry an experiment and get an outcome. So it's conducting that purpose of identifying, have I got a hypothesis? What's the question I need to answer? Now, I may have a broad question to answer, but can I drill down and I may have a few questions that I need answering. Can I apply that scientific or principles of science, if you like, of computer science, etc., and then do some experimentation. And experimentation from a software development might be application of different itinerates of process code solutions to a problem, that kind of thing. And then can I observe something from what I've done? Is it working based on what I'm trying to achieve? And then get to a conclusion. That all sounds very easy. There's a lot more involved than that. And the conclusion effectively has to lead back to the hypothesis. So you're a bit of telling a story when you're going through that core activity. I've got a question. I'm going to conduct some experiments, code writing, etc. I'm going to get some outcome. Is that working? Observing. I'm documenting or keeping some of these records. I've got some file that I'm documenting all this stuff in. And then I'm coming to a conclusion. I didn't meet the hypothesis. I've got to redo the hypothesis or ask a different way and then redo the whole thing. Or I've come to a conclusion. I can do it, move on, next experiment. Now, the other thing too that the Oz industry is looking at is this new knowledge. By creating new or improved products, services, etc., processes. And new doesn't have to be, it can be improved as well. So that's one thing. And when you're looking at new, you have to go down and dig and say, what makes this new? Is there any available information out there? How am I going to know there's available information out there? Well, I'm the expert in the field. So one is I'm really well read, so I'll know there's new. That I'm not referring to me. I'm referring to the competent professional, in that specific field. There are organisations out there that are separate to us that can actually look and research to sort of see, they have a big database and see if that specific point that you're looking for, if there is already information out there, is already a patent out there for it, etc. That's a small fee, but it is worth doing if you're not 100% sure if that information is already known knowledge or not. And that is not just known knowledge in Australia, but worldwide. And it's publicly available information. Obviously, there might be something that's out there, but it's not public information. It's still going to be new knowledge. So that's a real important bit of the slide and a very important part of the R&D. The thing that, what's the benefit of all of this? Why would you go down this path of all this pain? Well, one is you're already doing it, so why not document and go through this pain? Or joy, depending how much you enjoy pain. Then there's the side of, well, what's the benefit of all this? And that was a change on 1 July. On the outside, if you were under the turnover of 20 million, you basically nothing's changed. You still get, the 43.5% if you're in that tax rate of 25. But there are a few nuances there that I just want to run through. But one important thing to always check or ask yourself, is your aggregated turnover under 20 or over 20 million or 20 million or more? And that's quite important, because if you're under 20 million, the refund applies, which I'm going to talk about now. If you're over 20 million, there's a new way of assessing it from 1 July 2021. and that is also a rebate. So it offsets your tax and it gets carried forward. Whereas the refund offsets your tax, but if you make no taxable income, then you get all the money back. So that's why it's important to assess this. And aggregated turnover looks at not just your entity, but looks at any connected entities to you. Connected is, where they might have a control, so 40% or more. Question if they have control, but, something to consider. Or there might be a sister company which the director or the shareholder has control of both entities, affiliated, some way connected. So there is a control aspect, and that's how you determine aggregated turnover. So you get the turnover of both entities or many more entities, and work out whether it's under the 20 million turnover. So refundable. And most organisations that are startups and doing R&D or even non-startups that are doing the R&D will look at this as the benefit. And so, as we know, there's two tax rates, the 25% and the 30%. If they call it base rate entity, very sophisticated way of saying that you're carrying on a business and most of your income is from producing that income from your business, it's 25%. If your, say, a startup has pre-income, then potentially you might just have some interest income, nothing else, you'd probably be in the 30% tax bracket. If you had no income at all, questionable, but you'd be in that, effectively, that you could put yourself outside the base rate entity and be in the 30%. So there is those cases. So if you look at, but in most cases, you would have some income and it'd be from your operating business. So you'd be in the 25. So what's the difference? The difference is that 43.5 versus 48.5. That's the difference. And basically what you're getting is a refund of your income tax rate of 25 in the first scenario, and the net benefit is 18.5. So 43.5 is what you would get back as a refund on your R&D spend. So if you had 100,000 spend, you get 43.5,000 back. Of that 43.5,000, some of it is a relation. You would have got a tax deduction for the 25, but you wouldn't have gotten the 18.5. So there's the benefit on the R&D. So this was just an example of when we talked about when I was talking here about this 48.5%, I just wanted to quickly touch on that. So remembering what I said is that you don't have any operating income, or you have maybe some money in the bank and you've got $1 of interest or $100 of interest, and you've got R&D spend. So how did you get the money for the R&D spend? Maybe it was loaned, maybe it was contributed some way into the business, which would be loans, bank loans, personal loans, etc. So consider a base rate entity is 25%, as we said. But if you had a situation where you had pre-profits and or pre-earnings, if you like, and then you've only earned some passive income, and that might be $1 of interest, you potentially not a base rate entity, and you could use the rate of 30%. Now, when would you use that rate? Use it when you're calculating your notional R&D. So meaning your R&D spend, which in this case would be that 435,000, and you times it by the 48.5 instead of the 43.5. So, look, it's worth considering. It's that 5% differential. The only thing, the benefit is cash now. The only thing to be aware of, and with all R&D this applies, is when you pay franking credits. So when you get your refund of the R&D, it's not assessable, but notionally you would put it, it's not actually put into your franking credit, but effectively you're reducing your future dividends. So, frank dividends. That's quite complicated, but I'm happy to discuss that with anyone if they've got this situation. So I just want to move on to the situation where you're not getting the refund. You're over that 20 million. Is there still a benefit here? Is it still worth doing? The answer is yes. But your spend really has to be more than 2% of your other spend, your expenses, of your overall expenses. So the first 2% of your R&D claim, effectively, they use this premium rate is 8.5%. So 8.5% is a lot lower than that 18.5. That's basically the difference. But anything spend over the 2% gets a 16.5. So, it's still worthwhile if you're still doing a lot of R&D and you're getting a rebate. So remember, this is where you have a turnover over 20 million. So as I was saying, 8.5% is the incentive side, and 16.5 if you've got more than 2% of your R&D spend is greater than your other spend. So what does it mean from a dollar perspective? If you're a company with, say, a 25 or 30%, you're probably in that 30%. You're 38.5 you would get versus 46.5 for any spend over 2%. So it's still worthwhile, right? So it's still worth considering putting an R&D in. And remember that change came in from 1 July 2021, and it's already been in motion now for, this is the second year. So, well, third year actually, because you got second year, 2022, 23. Yeah, so second year. And this is a little example. I'm not going to go through it in any detail, but it's a good little puzzle to do when you've got time. But it's just showing how you can't claim any more than 150 on your R&D spend, and anything over that doesn't get any of the rebate, but you still get a tax deduction for it. And it just shows the thresholds, where you've got the intensity rate. If you've got 2%, under 2%, you've got 8.5 of it gets the incentive of 8.5% plus your tax rate. So that was that. When we go back here, that's at 38.5. And the second tier, this being here, that's 16.5, is where you get that rate of 46.5 in total. It's a lot of numbers, but happy to explain it one-on-one, always the case. Now, I'm just going to jump to some things I've already mentioned, but repetition's good. They always say things 7 times before people absorb it. Some are quicker than others, as always. I need it 7 times. So some of this, what I'm talking about here is Oz industry and some is income tax. So I'll go through that. So some things that can assist your business, and I just want to bring to your attention, is that 30th of June 2023, and I am talking about June year ends. There are substitute accounting periods, but I won't complicate it by going through that. So as you're already aware, there's a temporary full expensing. So where you buy an asset that you're using for your R&D spend, you could potentially claim the whole asset plus the incentive on top, as long as you're using 100% of that asset. If it's a portion, then you could claim the portion. So I think that's still worth noting, and this is the last year you can do it. Now, some of you would be aware is that there's a technology investment boost that came out in the last budget, and that says that from March 2022 to 30th of June 23, you can claim a bonus 20% on your eligible expenditure and depreciating assets for digital operations or digitizing your operations. Now, interestingly, so it's a bonus of 20,000, maximum of 20,000. So it's 20% of your spend, maximum of 20,000. Interesting. It's not enormous, but if I was doing R&D and I had to purchase some laptops, because in the example they use laptops as expenses that could be claimed, and I was looking at the temporary asset write-off. I've got till 30th of June. You've only got a day, but I was going out there and buying enormous amounts of computers, and I was going to do it on 1 July. I might do it today or tomorrow. I buy all these computers and they're worth 100,000, say, for example. I can get my bonus on that of 20,000. So I claim a tax deduction of 20,000 in my tax return. Now, what I found interesting, and look, I haven't put it into practice, to be honest with you, because it's only 30th of June 2023 now, and we haven't actually gone through that process. But what it's saying is that you can claim the bonus and you can claim the R&D rebate. So how would I look at that? I'd look at 100,000, 43.5, just assuming it's 43.5. So I get a rebate of 43,500. I do that normally. Now, remember, the 100,000 spend I don't claim in my tax return as a deduction because I'm getting the rebate on it. But what it's is seemingly to say is that I get the 43.5 rebate and I can get a tax deduction for the 20,000. I can't get a rebate on the 20,000. Like I can't get another 43.5 tax incentive on the 20,000, only on the 100, the base, but I can claim the 20,000 as an expense. So I can get both. Just how you show it in your tax return. So I thought that was interesting. The R&D portal, that's still alive. It's still existing. It's a great way to keep all your information for the application. It keeps the history. It goes with the taxpayer. So it's a bit of a pain to set up initially because it has to be the taxpayer that sets it up yourselves. But once you've got it set up, you know, I think it's a good way of doing it. Now, a lot of the advanced findings, so where you want to secure that you want the Oz industry to tell you that that is R&D. You want that certainty. There hasn't been enormous amounts of applications or applicants that do that, but if you wanted to, you could go through the process of doing it through the portal now, the application. Now there's a pilot program going on. There's about 23 participants doing these, they call them advanced findings, but it's basically getting certainty around your R&D. Now this is on top of doing your application, okay? So you're doing this, it lasts for 3 years, and you're doing it prior to the year end that you're effectively trying to get a certainty. So I put in my application, I do it through the portal, and that if they give you a positive result, I think after many back and forths, give you a positive result, as long as you keep doing the same criteria of what you put in your application, you can get certainty for 3 years on your R&D claim. So if you were capital raising and you were saying to your investors, yep, we've got R&D certainty, that might be a reason why you do it. Now, there's a pilot program going on with software developers. So software developers gone forward and said, look, I want to do this as an advanced finding, so I want certainty. I'm interested to see the results of that. Obviously, nothing has come out yet, but I'm sure in my next presentation next year, I'll have more information. Doesn't help right now. Board of Tax, I've talked about the dual agency and the results of that. Basically, they carry on as usual, more for them internally than for the taxpayer. It's also, what I have seen though, is there's a lot more information on the website. I think the Oz Industry website is very good, and so is the ATO website. I have to commend them for putting out as much information as they can to explain things. It can be an overwhelm for a taxpayer that doesn't really know, but they have a section updates. So what is coming out every quarter, I think it's fantastic. Like when you know what to look for, it really is great. The other thing that was going to come out was the patent box. So if you were to develop something and it was successful and you patented, so you made that registration, you could put it effectively in a box in an entity, and that would be boxed away, and you could get a lower tax rate effectively. But the current government just said put it away and said that they weren't going to proceed with it. So it's just on hold. It's not really, nothing's going to happen with it with the current government. Another interesting thing that's come out is the digital game tax offset. Now, I haven't done any digital games clients, but if you're developing any games, digital games effectively, and potentially other education courses and so on, that this offset could apply to you. Now, the legislation applies from 1 July 2022. It's just been given royal assent, but you can, you apply it for this 30th of June 2023 year. It's different to the R&D tax incentive. You can't claim the R&D tax incentive plus this digital games. You claim one or the other. But this rate is 30% and it's refundable. And there will be criteria around that. But that's an interesting one to consider if you're in that, if you would meet that criteria. Now, the other thing I wanted to talk about here was just from a practical sense, the registration tips and the portal. So one thing is when you're setting up your portal, you have to use the ABN of the head entity or the entity, the company that's doing the R&D. Now, if you're a single entity, meaning you're not tax consolidated, and you'll know what I mean, then you use the ABN of that entity doing the R&D. If you are tax consolidated and you're a part of a group and the subsidiary is doing the R&D, it's the head entity's ABN that you put in. Because as you're aware, if you are tax consolidated, it's the head entity that lodges the tax return. So hence why it's the ABN of the head entity. And in the questions there, they'll ask you, are you doing the R&D as a head entity or as a subsidiary, etc. So it's all sort of comes out in the wash. If it's the first time you're setting up the portal, I recommend not doing it at the last minute, like the last week of April, because things could go wrong. And then you could miss out on doing your applications, because the only way you can do the application is through the portal. And what happens is that when you register, you let your tax agent know, and you give your tax agent, we give you all the details, and you give us access. And there's an expiry date. So you might give us access to 30th of June 2023, because we've just done 2022. So we'll coach back to you and say, could you expand that access so we can have it for when we do your 23 registration? So that's one way for you to also guard against, your agents, so if you don't want them to see, if you only want to do 1 year with them, just give them 1 year. If you want to do more, then you give them more, etc. Make sure you have the right financial year. I know that sounds weird, but, if you're 30th of June, you'll never make that mistake, but maybe you're a December year end and you've put the wrong year in the, for the portal. So most projects, they will roll over. Make sure you have an end date that goes to the next year. If you have the end date being 30th of June 2023 for each project, like it asks you for the life of the project, it asks you for core activity, when do you think it's going to end? If you think it's going to end at 30th of June 2023, put that. If you think it's going to end in 2025, put that, because then it'll roll the project over. Now, it rolls a project over, but just be aware that it's a project outline that probably doesn't change. You can always add things to it. But the R&D core activity will always change. There'll always be something, because you've got to be doing something. You might be carrying out the same experiment, but it'll be a different observation that might happen, or a conclusion. The supporting activity may change. So just be aware of that. So just little practical tips. So just some basic things. I've covered the turnover test. It looks at the current year with related entities. So if I'm doing 30th of June 2023, I'm looking at what my turnover is in the current year. It looks at your related entities turnover, etc., which can be quite complicated, but you look at the base rate entity rules, basically. So what is determining whether you're a 25% or 30% tax rate payer? Expenditure has to be at risk. We talked about that if somebody comes along and says, well, can you do this for me? And you're a contractor in software and you're doing something for a client and they're paying you for it, it's not really at risk. And there's a lot of information on the ATO website. Core activity, we've talked about the core activity. I think the emphasis here is document, document, document. Painful, but necessary. We've talked about Oz Industry. They have guidance on software developers, and I have it sitting in front of me. It was published in April 2023, software-related activities and R&D. They're always updating it. I think they updated in March 2023 to put an example in there. So they've got good stuff. I always try to give clients a copy of that as part of the kickoff meeting, where I give the Word documents and so on. Happy to send that to everyone on this presentation as well. I mean, it's all available information, but just so you can get your hands on it quickly. On this Oz Industry and the ATO have acknowledged, not necessarily having always some formal record needs, keeping needs. It may be snapshots of things, take your camera, get a snapshot of your outcome, keep that on your records. Now, towards the end of the slides, just things to be aware of. Now, it doesn't say in the legislation that you have to keep timesheets in order to determine where your R&D spend is. So this is from the expenditure side. But if someone's coming to ask you, well, how did you determine that you've spent that many salaries on this particular project or this core activity? You're going to say, well, I just went, yeah, that was how I determine it. No, well, it's a bit hard, isn't it? It's easier if you keep some sort of software to track it. So that might be a Jira software that you track it in timesheets. It might be that the contract with the R&D developer, if it's software development, for example, or any industry, might be specifically just to do R&D, and the contract says that. So that might be more obvious. But if you're doing many projects, R&D projects, you might have to divide your time, how you're going to determine that. And timesheets is the easiest way to avoid problems later. Also, if you contract with someone, you have to make sure that they're in Australia, that they're going to do the work in Australia. You have to get that assurance, because any R&D done overseas, you have to get an overseas finding. So you have to apply to Oz Industry, and they have to allow you to include that expenditure in your tax return effectively for overseas. And the criteria is not easy to meet, because you have to have your core in Australia, and you have to have more than 50% of your spend, or 50% in Australia itself, and it has to be related to that core activity. So it's not easy to meet the criteria. I don't think they're trying to make it difficult, but the whole point of this program is that they want you to spend in Australia, not overseas. That makes sense. But there is a way, if you have expenditure overseas, there is a way to apply for it. Depreciation, as we talked about, the temporary full expensing, and it ends at 30th of June this year, 30th of June tomorrow, 30th of June 2023. And that is where you can pretty much claim all your R&D assets. If you're using your assets, claim it outright, even just on your tax return. But you can actually get the concession on top of the spend that you have, like the laptop, etc. Now, this is not the case once this temporary full expensing goes. Really, you have to be careful. You can't just claim the instant write-off and get under the normal rules. Just claim depreciation. If you decide to instant write-off, you claim a write-off on all your spend if you meet the criteria under the normal depreciation rules. You can't also claim the R&D incentive on that. So there is a few things to watch out for. Apportioning of expenses. The ATO is concerned here that you're just going to willy-nilly claim everything. Just be careful. If you're doing something, look at the expenses. Would they relate to your R&D? Do they relate to the employees that are doing the R&D activities? So if you're a software developer and you've got 10 software developers doing R&D, and then you've got 200 staff, maybe 20 over 200 might be a good apportionment for some of the expenditure. Maybe it's not. There's no clear defined rules at present, but there's information on the ATO website. As I mentioned, don't claim overseas spend, only claim Australia unless you've sought a ruling with Oz Industry, and I'm happy to provide more information on that. Also, I always work backwards. I look and see, well, what is my R&D spend before I look into whether I do have R&D. I know it's a catch-22, but have a look and say, well, what is my R&D spend, and is it not eligible? So there are things that aren't eligible. So, if you buy a core activity, that's not eligible. So an IP item that you buy, there might be things that you're doing in-house software development for your business as such, but it's not a subscription or anything like that, that potentially that's not R&D. It might be, but you have to look at the circumstances. If it's interest, you can't claim R&D on it. You're constructing a building, you can't claim R&D on it. So, just to be careful of what is eligible and what is not eligible. So what's on the ATO radar? So when I was at the roundtable meeting with Oz Industry and ATO, and I got to go as a representative for the Tax Institute, so that was very fortunate myself to get to listen in. And all this information is publicly available as well, so I'm not saying anything out of school. ATO is looking at sort of payments to associates are not considered to be made when it says that. It's interesting, there's a few sentences cut out of there, but anyway, basically you accrue a payment to an associate. So I've got a simplest one is I've got a shareholder and I'm the founder maybe, and I'm the one that's doing the R&D. I'm maybe an employee, maybe I'm a contractor. If I'm an employee, it's going through the R&D entity, I'm okay. but maybe I do it through another entity, and I accrue that expense at year end. They're saying that's a payment to an associate. So because I control that entity, I'm associated to that entity. Any spend, if I accrue it alone, it's not accepted as paid. So even though normally an expense would be, an expense if it's incurred, if it's accrued, in this case, they're saying, no, if you haven't paid it by the end of the year, can't claim it then. You can claim it next year, but you can't claim it then. And there's a few things people do to contrive the payment. So round robin of payments, they make the payment, they put the money back in, they convert it to a loan. They do all these things. They might issue shares as being payment, etc. So all those things are not paid, and they're not accepted as an expense. So they're not accepted as a portion of the notional deduction. So just to be aware of that. I've run through the apportionment question, and in most cases that go through the R&D process, taxpayers just can't support the claim. They have no evidence. So that's why it's important to keep some sort of record of what you're doing, keep some evidence of your experimentation, be able to show the result as well, but the result in itself is not meaning that you've carried out any R&D. So that's just some tips there. Happy to answer any questions.
Am I right? You can only claim paid R&D expenditure in the current year's R&D incentive?
You can claim expenditure incurred. So let me just identify the difference. So it only has to be paid if it's paid to an associate, okay? Because you can just make up an expense. So if you're as I say, if it's a contractor that that's associated to the company, might be associated as a director or might be a shareholder or somewhere like that, you can contrive the expense so that you get more of a deduction. So that's what they're looking for. So no, you can accrue expenses, or for example, you have an invoice that you've accrued, you haven't paid by year end, it's not an associate. That's okay, you can claim it. So there's a distinction between an associate, when you're paying an expense that's for an associate, and one that's not for an associate. I hope that's clear. So yes, you don't have to necessarily pay every expense, only when it's with an associate.
Next question, is R&D considered owned by the co in Australia if it's 100% owned by an overseas parent?
So there is rules around that. So you can have a subsidiary of an overseas parent and claim the R&D. You just have to have an R&D agreement that subsidiary is doing the work and using the IP of the parent. So yes, we've put an R&D agreement in place. So we have some lawyers that do that, and you can claim the expense. There are rules, there is more criteria than that, but that's just a quick summary of it.
If you have an asset that is not fit for purpose by 30 June 2023 and not fully expensed in the asset, then written off over the R&D project?
It's a loaded question, that one. So the question is that if you're still developing an asset and it's not in use, you're likely, and it's not the R&D itself, if you like, then you wouldn't be able to claim it. And again, if you're getting an allowance, it's got to be installed ready for use. So if you're buying it, depreciating it, you've got to installed ready for use by 30th of June. I don't know what fit for purpose means, but if it's not installed ready for use, then you can't claim the temporary asset write-off, one. There are rules around whether you could be developing the asset itself. So there are rules around that as well. So the asset itself might be in a project pool and you can't really claim depreciation or the R&D offset around building that asset when you know how to build it. And that'll form part of, depreciation later when it's installed ready for use. But anything working around how to build it, the R&D that goes into it, that will be claimed as an R&D expense. So yeah, it gets quite complicated when you're building an asset versus you're buying an asset. So that's why you've got to be really clear on what we're talking about. But effectively, if it's not installed ready for use, then you can't get the temporary asset write-off or depreciation.